Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the pressure is ramping up on China. The Shanghai equity market couldn't hold yesterday and it ended up down more than 1.5%. Tokyo was down even more, and the ASX 200 was down 1%. But Wall Street has opened today, holding on to Friday's levels following similar flatlining in European markets. The China falls are getting extreme. More than $3 trillion have been wiped off the value of China equities in this downturn, more than 20% of Chinese GDP. And the index is now back to levels last seen in November 2014. The home team has not proven to be a strong enough bulwark against market pressures, and there are now reports that Beijing is leaning on insurers to come to its aid. American retail sales barely rose in September as a rebound in car sales was offset by the biggest drop in spending at restaurants and bars in nearly 2 years. Meanwhile, business inventories are rising there. Across the northern border, Canadian companies are optimistic about the year ahead, especially when it comes to sales growth, foreign demand and their investment plans. And that survey was taken before the new NAFTA agreement was struck. It is noticeable how many companies are moving to fill the space of their American counterparts in the trade with China. However, Canadian home sales fell more than expected in September, with sales levels almost 9% lower than the same month a year ago. Prices have stopped rising and in fact are falling in Vancouver. In Europe, they seem to be at the pointy end of the Brexit negotiations. The EU has given Britain a day to settle its position on Brexit before deciding how to respond to a new British threat to disengage from talks on the EU Brexit agreement. Everyone seems to understand these are just negotiation ploys, but they are playing a very dangerous high-stakes game. The UK-Irish border remains a key issue. Markets and the EU are expecting the UK to concede key points. There'll be broad ripples felt even here if they don't. The US Treasury 10-year yield is unchanged at 3.16%. Their 210 curve has slipped to just under 30 basis points. The Aussie government 10-year is at 2.7%. The Chinese 10-year is at 3.62%, and the New Zealand government 10-year is at 2.67%. Gold is up $8 an ounce and now at $1,226 an ounce. That is actually nearing a 3-month high. And US oil prices remain little changed today at just under $71.50 a barrel. The Brent benchmark is just under $80.50 a barrel. So far, markets haven't reacted to the US, Saudi, Turkey stresses. And the Kiwi dollar is starting today firmer at 65.5 US cents and its highest in 2 weeks. On the cross rates, we're also up to 91.7 Aussie cents and 56.5 euro cents. That puts the TWI at 69.4 and also a 2-week high. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.